Hello, my name is Andrew Thake, and welcome to our Minds and Money 5 at 5 show. This week's episode is sponsored by Anaconda Mining, Premier Gold and Midas Gold, and is brought to you in association with RGN Resource Global Network. For those of you attending 5 at 5 for the first time, game of 5 at 5, 5 guests at 5 p.m. Eastern Standard Time in this instance. It's a mundane engagement between investors and miners through a lively interactive format during the current situation. A few announcements before we start. Please have your videos switched on. You can either submit questions via the chat function, which is at the bottom of the screen. Or even better, you can wave your hands via the invite participants function. I will unmute you and you can ask your question live. And in towards the end of the week, so the Thursday afternoon our time, Friday morning Australia time, invite you to bring along a glass of wine or beer, sit back and relax and enjoy. We will also be having some polling questions to go and keep the event interactive. So, Brooke, perhaps we can bring up the first polling question of today, which should hopefully be coming up onto your screens now, which is where will the price of gold be by the end of 2020? I've given you 5 choices here. Below $1,800 an ounce if you're a real pessimist, $1,800 to $1,900 per ounce, $1,900 to $2,000 per ounce, $2,000 to $2,100, and last but by no means least, above $2,100 per ounce. Whilst you are voting, I'm going to introduce this week's guests and get them and ask them for their thoughts. So our first guest for this week is Kevin Bullock, CEO of Anaconda Mining. Where do you think the price of gold will be at the end of 2020 and why?
Well, I think the consolidation and backfilling that's happening now is extremely healthy in this bull market. The logistical nightmares of COVID have only enhanced the need for financial stimulation worldwide for some time to come. There's no one currency that can be the savior, so it's hard to choose a currency in a global financial crisis. This combined with the Fed stating today that they want to loosen monetary policy and attempt to push inflation higher, that's also going to push real interest rates lower, which is also good for the long-term gold price. So I'm saying it's going to be between 2,000 and 2,100 by the end of the year, but very close to 2,100 rather than 2,000. And then by spring, it'll be through 2,100. That's my guess.
Okay. And next, turning to Keith Spence, President of Global Mining Capital Corp. What would your answer be?
I'll just give my number where I feel it's going to be. I agree with Kevin. I think closer to 2,100, between 2,000 and 2,100. Gold is consolidated a bit right now, and I wouldn't be surprised if it goes back to below 1,900, but it's just going to be short-lived, and that is a good and healthy thing because it's building a base for the next movement. I wrote a piece earlier this year in May where I called the Big Six. The Big Six reasons why gold momentum is going to be strong and will continue to be strong for the next few years. The 6 cylinders, and all 6 cylinders are firing. It's, the flight to safety, low interest rates, so gold is not seen as a penalty for investing in gold. The traditional supply and demand, India is going to be coming off their post-COVID. Everybody's going to be anxious, India and China, to get gold. The supply side, we haven't had a major substantial discovery in gold in the last big decade. I'm talking about a mega mine of substance. Maybe we probably say something what we got in Ecuador, but nothing the size. And then geopolitical issues. So all the things that are required for higher gold prices are in place. And there's a famous saying, don't try to stop City Hall. City Hall is moving, so get out of the way.
Okay, and our third guest is Peter van Alphen, Chief Operating Officer from Premier Gold. What are your thoughts, Peter?
I suppose not a lot to add there. It's hard. I think it's hard to follow Keith there. I've got to go and I wrote it down there, Keith. I've got to go and read about the 6 cylinders. But no, I think we also optimistic. I'm maybe a little bit more conservative, and around about the $2,000 mark. But these uncertain times we're living in, obviously gold is going to remain strong.
Justin Machin is Director of Denham Capital Management. What are your thoughts, Justin?
Andrew, thank you. I think I'm actually in the same camp as Peter. I think I see gold kind of staying at current levels, somewhere between $1,900 and $2,000 an ounce. Assuming that the current stimulus environment stays status quo. Although I do think we could have some volatility, around either the U.S. election or if there's a kind of a second resurgence of COVID. So could potentially see it going higher, but I'm kind of comfortable with current levels through the end of the year.
And our fifth guest is Stephen Quin, CEO and President of Midas Gold Corp. What's your answer, Stephen?
Yeah, I'm in the sort of $2,000 range that I think is a reasonable target for the end of the year. I think it's a, sort of a steady trend that's been going on, for a while, but you can go back 100 years and it's been a trend that's just gradually crept upwards. And I don't think there's any reason why that trend would turn around, currently based on the economic situation.
Yeah. Okay. So I think, I'm not sure if we're able to get the polling answers up. If I recall, I think the most popular answer from the audience was 2,000 to 2,100 bracket. Yeah, that was the most popular answer with 34%. So thank you to all of those who voted. So we're now going to go on to our first mining update of the show, which is by Anaconda Mining. So Brooke, if we can perhaps bring up the slides for Anaconda Mining and just take down the poll. This is a bit of background. Anaconda Mining is creating an emerging gold producer in Atlantic Canada. Their CEO, who you've already met, is Kevin Bullock. Over to you, Kevin.
Thanks very much, Andrew. Hopefully everybody can see the slide on screen as I can see it, so I'm sure everybody can. We have a three-pronged approach to driving this company forward and creating growth, and that is to continue producing at generating free cash flow at our mine in Newfoundland, to have internal discovery at a very exciting exploration project about 40 kilometers east of our current operation where the mill is, and a development project that's in a definitive feasibility study right now called Goldboro in Nova Scotia. The Goldboro project is the largest single gold deposit in the province. It's at about 1.4 million ounces right now. We're finalizing a definitive feasibility study by the end of the year, and we'll be on to discussing project finance and finalizing our permits by the end of next year. Then it'll be about a 15 to 18 month build, and we'll build something producing somewhere between 60 and 80,000 ounces of gold per year. Tilt Cove is a very exciting exploration play. It's 2 years it took us to acquire this ground, do deals with prospectors and put it together. 20-kilometer greenstone belt, which smack dead in the middle of it has the historic Nugget Pond property that produced gold at a diluted grade of 10 grams per ton. We have many targets. We start drilling at the end of the month, and this is truckable to our mill, which has 15 years of tailings capacity in the first pit that we mined there, which we have permitted. Just to give you an idea of value of something that has 15 years permitted tailings capacity at 1,300 tons a day with no dams being a pit, to build something like that would be in the tens, if not hundreds of millions of dollars. It's worth nothing if we're putting no ore through the mill. It's worth a lot if we are, and we continue to do so with new discoveries. The Point Rose operation itself, we've been generating cash flow. The EBITDA for the first half of 2020, even though we're producing only 18 to 19,000 ounces, was close to $8 million. So it's run very well and has a great delta at these Canadian gold prices. Can you switch to the next slide, please? The Tilt Cove project, which I mentioned, this is the greenstone belt that I'm talking about. It's a banded iron formation which stands out very, very easily in the geophysics. We have cross-cutting structures which create ponds in the area because of the depressions. And some of these cross-cutting structures bring mineralized fluids, which is in the case of Nugget Pond, which precipitates out the gold, turns magnetite into some other iron formation, and creates low magnetic readings at the cross-cutting structures with geochemical halos around it. Those are the targets we've identified, and we start drilling at the end of the month. Next slide, please. As far as Goldboro goes, we purchased this property with the acquisition of a company back in 2017. We paid $15 an ounce. It had 850,000 ounces at the time. We're now up to 1.4 million, working towards pushing it to 2 million. It's high grade. There were 27 veins when we bought it. We've now identified more than 57. It's a 2.1 kilometer long strike. It's open in every direction, down dip at depth on strike. We've drilled as deep as 550 meters and continue to hit it. This is analogous to Fosterville type mineralization in Australia, and we continue to expand this deposit. Next slide, please. Or that's it, isn't it?
Yeah, yeah.
So really, what I'd like people to take away from this is that we have, we're going to drill 20,000 meters on all our projects by the end of the year. Lots of information over the next 6 months. An aggressive marketing campaign based on those results. We're getting the market to understand who we are, and in this bull market, it's working very well. Thanks very much.
Okay. I'm going to first of all just jump to questions actually coming from the audience. Kevin, what is the opportunity of expanding the mill at Point Roos or Rouse?
We've looked at expanding it, and for relatively small amounts of money, we can get it up to 1,500 tons a day. We can increase from there with further expenditures. It's really the crushing circuit that we have to work on to get it up to 1,500. However, we're not in a position now that we wish to increase the level. The type of deposit we're looking for at Nugget Pond are similar to what was mined there before at the Nugget Pond mine, which are relatively small but high-grade deposits that precipitate the gold out in a funnel type operation at the intersecting point. And we don't need the size to justify its own infrastructure because we have the infrastructure. We don't need to permit for tailings and other things. So the permitting process would be quick because we have the mill. We're the only producing gold mill on the island, Newfoundland Island. So we could find something and move it forward quite quickly. So we're very excited about drilling off that deposit. We wouldn't be able to send more than the 1,200, 1,300 ton capacity we have now from any one of those deposits. Should we find more, we consider expanding.
Okay. I'm just going to go to Keith Spence. I was wondering, Keith, do you have a question for Kevin?
Kevin, longer term, are you thinking about having some kind of synergies with those 3 projects? Are you going to try and have some kind of tolling operation, central point, and maybe include some non-company tolling arrangement? Is that part of your macro maritime plan?
The key for us is to put our own ore through the mill, but there are opportunities for M&A in the area. Sometimes those are difficult to come to a conclusion on, but we're always open to discussing. We also have a deep water port, good for 60,000 ton vessels that we own right there at the mine site. So we could transport in concentrate from anywhere around the world, really, if it made sense. We have capacity in the back end of our mill right now for concentrate production. So we could custom mill concentrate. If we ever ran out of ore, I know that Point Roos would continue doing custom mill.
Okay.
Turning to Justin from Denham Capital. Justin, do you have any thoughts or a question for Kevin?
Yeah, I think it's a really neat story because you have this cash flow engine that you can use to help underpin the exploration work you're doing. You know, how do your investors think about it? Do they like the production aspect of the story, or are they really more focused on the exploration?
Well, we've been producing for 10 years with free cash flow in all those years, and we really never gained any traction. And the reason is under 20,000 ounces a year, that should be a private company. I mean, if I were to be honest. And when I came in a year and a half ago, I thought there's no way that we should just continue on this and hope for the gold price to go up so that people make a couple of more pennies on their stock. I want to turn this into a 150,000 ounce a year producer. That's going to be through internal development, internal exploration, and M&A tacked on the end of that. And that's what we're aggressively working towards, and we have focus on that now. We've turned the company around, and we're really focusing on becoming a larger producer, and we're starting to get recognized.
Okay. And what does the balance sheet look like today, Kevin?
We have $11 million in the bank and $2.3 million of debt.
Awesome.
Okay.
And we generate
Kevin,
we generate about $500,000 to $1 million a month in free cash flow.
Very good. Kevin, what's your cost? Your cash cost, ISIC cost?
Our all-in sustaining costs in Canadian dollars are about $1,300 an ounce. So our delta is 100%, close to it.
Wow. Very good.
Okay. The question that's coming from the audience, from Mike Hurwitz. Kevin, can you just outline your ownership structure and elaborate about the strength of your management team?
Yes, we have. It's very much a retail story, as it's been for the last 10 years. We have got some institutions in lately, and that's growing, and that interest is growing, and we want to continue that. So we have about 15% held by institutions, 3 to 5% owned by management, and about 80%, 75 to 80% by retail shareholders. That's been changing to having more institutions in, and we hope to keep going that way. Management owns quite a bit. I own quite a bit. I've bought it all. I put my salary back into the company in purchasing throughout the year. Believe in this story. We've got the right building blocks to build something special here. The team, including myself, have done this several times. I was involved with IAM Gold when it was private, moved to Africa, signed a deal with Anglo to build Sadiola Mine, signed a deal with Ashanti for joint exploration in West Africa. We took that public. That's now a multi-billion-dollar company, as people know. I then worked for a junior called Fox Point, was hired to find an asset, negotiated the purchase of the Macassa mine. I moved up to Kirkland Lake, reopened the mine, changed the name to Kirkland Lake Gold. That's now a multi-billion-dollar company. I then started my own company called Volta Resources. We drilled off the largest deposit in West Africa. At the time, we were purchased by B2 Gold, and that's obviously a multi-billion-dollar company now as well. And I'm on the board of that. And I just see Anaconda as having the building blocks to be the next one for me. And I've been putting the team together to be able to do that. So we have the team, the assets, we've turned the company around, it has focused, and we plan to make this a major step up in value.
Okay, fantastic. Thank you very much for that, Kevin. I think probably in the interest of time, we probably just need to move on, although we will be returning to Kevin later on in the show. Can we perhaps move on to our second poll? Anaconda Mining is, as we heard, a producer. But just curious in terms of asking, as an investment opportunity, what do you, the audience, prefer as an investment opportunity when it comes to gold investment? You should have 5 options coming up on your screen. Junior gold exploration companies, junior gold development companies, junior gold producers, defining that as being $1 billion market cap and below, gold mid-tiers and majors, and last but no means least, gold royalty and streaming companies. Whilst you're voting, let me ask our investors. Probably for Justin, I'll perhaps ask a slightly more generic question. At what stage of development does Denham Capital like to become involved in?
So Denham is historically focused on investing in late stage development. So we like to back companies and be the last equity capital in for them to take their project through construction and into production so that we can capture the multiple re-rating. More recently, we've been having a lot of discussions with corporates, particularly those with producing assets, on either acquiring assets outright or providing structured financing solutions. We actually just appointed a new CEO for our South American copper business, and we're actively looking for producing copper assets in South America.
Okay. And Keith, where do you invest your money when it comes to gold?
We tend to like, and our partners that we work with are late stage near development projects. So projects that are shovel ready and about to go into production, or has just started production and maybe have some teething problems. I've done a lot of sort of valuation work on the curve, the valuation curve, and we've found that the place where you get the most bang for your buck is that point just before you go into production. That's where most of the project is de-risked, but the market tends to severely on the value of the company or the project.
Okay, thank you very much for that. Brooke, perhaps we can just end the polling and just show the answers on the screen. Looks like it's fairly even split, but Unigold Development Company is just coming out slightly on top on 32%. So without further ado, perhaps we can get the slides up for our second project of today's show, Brooke. And our second project is going to be on Premier Gold. Premier Gold is a North American focused company that holds a portfolio of projects ranging from early exploration to production. Their chief operating officer is Peter van Alphen. Peter, how would you have voted? And would you like us to give, and can you also give us your company update as well?
I went for I always like the juniors, the operating juniors. I think it's probably driven by the fact that that's where I like to be. I come from the operating side, obviously on the operating side, and that's an area that I do tend to like. Good evening, everyone. Thank you for the opportunity to share our story. I'm going to run through it very quickly. There's lots to talk about, but I'll try and give you an idea of what we're about. If you could just go to the next slide there, Brooke. We've got the obligatory forward-looking statements. You can find it on our website. Next one, if you may. Thank you. So just I'll run through the areas in where we are operating quickly, just using the slide. But Premier is 100% North American focused, safe and world-class mining jurisdictions. We've got a number of projects that are all the way from in operation, producing assets that we own 100% to joint ventures to early exploration opportunities. You know, one of the things that we've recently released is that with the projects and the assets that we currently have, is that a large number of our investors have been saying to us that there's a belief that there's value that we don't see for the sum of the parts of all of our assets, and hence the looking at the idea of spinning out some of the assets. And as we go through this, we'll touch on that. And so, if we can just, I'll start down in Mexico. So in Mexico, in Sonora, we've got the Mercedes mine. It's 100% owned. The mine has previously been producing at around about 2,000 tons per day. We have been successful there with the drill and found some new discoveries. But one of the issues that the mine has faced in recent past has been struggling to be cash positive. Some of the key issues there is that it's been issues of dilution, issues of reconciliation back to our models, and then also productivity. And so we've spent a lot of time in the last year focusing on those, and we've made numerous changes there, everything including redoing all the block models. With COVID hitting in March, we were forced to shut down, and it was a good opportunity to relook at the mine plan. We produced a new mine plan, which is a focused, simplified plan, working from one portal as opposed to 5. And we are now 2 months into this plan. We started up in June, but couldn't actually start producing. We were doing development initially, mainly just because of constraints around people on site from COVID. But we are 2 months now, just about 2 months into our revised plan, and it's looking very good. We are very pleased with the results, and confident that as we go forward, that we'll be able to, that Mercedes will be cash positive. Again, continuing with exploration there in the San Martin and Marianas area, as well as Lupita extension. Then if we move on from Mexico and we start, if you can just, go back, thanks. Going into Nevada. So in Nevada, we've really got the three projects now. I'll start with South Arturo, which is our joint venture with Barrick, operated by Nevada Gold. It's the only joint venture in the Carlin Trend. and we currently own 40% of that, producing from El Nino underground, which is an underground deposit or the extension underneath the phase 2 pit that we previously mined there with them. We're currently doing work on the phase 1 and phase 3 pits, and we are working together with them to try and come up with a plan there that will see those 2 pits also begin to produce in the foreseeable future. We see a lot of exploration upside there. We've been drilling on the underground, expanding the underground resource, which we're hoping to see some results soon from that, together with additional work that is currently in play for phase 1 and 3, and also hopefully more in the foreseeable future. The McCoy Cove is also 100% owned project for Premier. It's currently, it is permitted for advanced exploration. It's what we believe is one of the highest grade undeveloped gold deposits in the US. We've got a resource there which runs at about 11 grams per ton. Currently, we're doing some additional metallurgical work there. The one factor that McCoy Cove, or the one issue that we want to resolve there, is to potentially be able to have a standalone processing facility. And so we're doing work there to try and see if that is actually feasible without enormous expense of building roasters and all that good stuff. The third project in Nevada, which is that basket that we are looking at potentially spinning out, is the newly acquired Getchell project. It's currently in care and maintenance. It's a project that we see a lot of potential for. It's a large, high-grade and permitted land position located at the intersection of Getchell and Battle Mountain trends, close to Twin Creeks, Turquoise Ridge, Turquoise Ridge mining operations. We are expecting to close that transaction sometime in October, November, and it's produced 1 million ounces, and we'll be working on that in the foreseeable future, and see that as a good asset for the potential spin-out. Moving to Ontario, it's what we look at as our flagship operation or flagship project, which is the Greenstone deposit. This is a joint venture with Centerra Gold, 50% owned by each, and then run by an independent company called Greenstone Gold Mines. Currently, Centerra has been doing the sole funding of that as part of their earning, which was 185 million Canadian. They've currently, up until the end of June, spent approximately 150 million, and so they're currently still funding that. It is a shovel-ready project. We believe one of Canada's, if not North America's, largest undeveloped open pit deposits. It's on a highway, on the Trans-Canadian Highway. It's permitted. There's nearly 10 million ounces of inferred and measured, indicated, and inferred ounces for that project. There's upside to that. There's a number of areas there, the underground deposits there that have not been included in the current feasibility work to date. In October, we released a new resource there with a substantial increase, and we look forward to. We do currently have the lawsuit with Centerra, but we hope to get that resolved in the near term and be able to start construction of this project. And then the last one that I'll just touch on is at Sega, which is in Red Lake. The Sega project is a exploration project. We're currently using flow-through financing there, and we see this as being a great future exploration target for ourselves. If you go to the second last slide there, Brooke, that's just a summary of reserves, just under 3 million ounces, resources, 6 million of measured and indicated, and 4 million of inferred. And if you go to the last slide, just as a summary, that's really how we see ourselves and the pipeline that we have. And that's in a nutshell our story.
Okay. So thank you very much for that. Perhaps I can just turn to one of our investor guests. Justin, do you have any thoughts? Do you have a question for Peter?
Peter, I was just curious how you guys are planning to attack the newly acquired Getchell property. Are you going to be restarting the underground at Pinson, or are you going to be pursuing I think it was the Mag open pit?
Yeah, we are. I suppose the answer is yes. There's obviously a legacy there from the old APNA days. The underground was challenging. We know we need to do some drilling there and to better understand it, but we believe that with some additional information, we'll be able to get the underground opened up again and restart that. There's some metallurgical work that we need to do. And so those will be our initial focuses, along with drilling on surface again to better define the resource first.
A question from Jacob Ambrose Wilson of Resource Global Network. Peter, how have you found the permitting processes in each of your 3 North American jurisdictions?
Prior to joining Premier, I was more familiar just with Ontario, and what I've learned is that the one thing that we all have in common is that these things seem to just take long. I think if you look at Ontario, the Greenstone project, for example, is that we've been able to get that to the point we've got our Schedule E amendment there. But these projects are taking five years or plus to permit. The water rights issue in Nevada is not an easy one to navigate, and you really have to be on the ball, and they taking long. It's the slightest deviation from a plan there, and then you tend to add on. It's measured in years, so it's challenging.
Mm-hmm. Keith Spence, do you have a question or any thoughts?
Yeah, Peter, I see you have a joint venture with Barrick, the Nevada Gold. Have you guys thought about picking up more assets or anything that Barrick might want to let go, or they're too big for you?
No, I think we're always open. I'll quote Ewan on this, is that we'll never say no to looking at anything. And I think in terms of us there in Nevada, I'd like to say that we have always had a good relationship with them. I think with Barrick, with Nevada Gold Mines and the team that's now running that, is that we've got, I would argue, even a better relationship now. They're a good partner to have. We have been given lots of opportunity there to get more involved. They are the operator, but we've been given a lot of leeway now to get involved there as the junior partner and be able to add our input there. So to answer your question, is that those opportunities, we're obviously exploring them with them and looking at, whether it's processing capacity or small opportunities that are too small from them. We believe that that's an opportunity, and that's why we are very interested in the Nevada area.
And just one quick question, quick last question, Stephen. This is from Leslie. Are there any opportunities for shared infrastructure, by power, roads, or rail for the Nevada exploration sites?
At this point, I suppose shared infrastructure, it's probably not, maybe in terms of processing, but we've got a ways to go there in terms of maybe in terms of processing down the line. Okay.
Thank you very much for that, Stephen. Again, we'll be coming back to Stephen later on in the show. But let's move on to our third mining update of this week's show. So perhaps we can bring up the slides for Midas Gold Corp. Stephen Quin is their CEO and president. Midas Gold controls a world-class stibnite gold project located in the historic Stibnite Yellow Pine mining district in central Idaho. Over to you, Stephen.
Great, thanks very much. So yeah, I'll just hit on the highlights as we go through. So, as it says on the right-hand side and sort of in the circles in the center, this is a very large, high-grade, low-cost, long-life project. We produce antimony, or will produce antimony as a byproduct, which is a critical mineral. It's located in the US, which, as was mentioned earlier, permitting takes time, but your geopolitical risk is significantly lower than a lot of other jurisdictions. And the unusual twist to this project is that this is a brownfield site, as you can kind of see in the image in the background, that's been heavily disturbed by prior mining. And we're going to essentially address all of those legacy issues, which are substantial, and essentially restore to the site to substantially better than it is today. If we can go to the next slide. So where we're located is in Idaho, and it's sort of an emerging, gold area after sort of been in limbo. It was fairly active in the sort of late 80s and into the 90s, and then really kind of got missed in the 2000, early 2010s kind of part of the gold cycle. And we were really the first company to get in there in any scale and start to, relook at a lot of the gold areas that have been sort of ignored through the collapse in the late 90s gold price. And so we consolidated the property through 2009 through 2011. Obviously subsequent to that, there's sort of been emerging interest, with Integra picking up the Delamar project, Revival picking up the Bear Trap project, and other players in the state as well. And the gold story in Nevada, is very well known and well understood, and the gold belts are well understood. Idaho's sort of really been not had a lot of information published. A lot of the work was done, but it wasn't out there. And what's really become apparent is there's this major northeast trending gold, copper, molybdenum, but essentially intrusion related mineralized system that runs across from around where Integra, the bit through Boise is a bit uncertain because of the valley there, the major valleys going across there and the floodplain basalts and things. But then you get up into Thompson Creek and through our area, and we're part of that major structural belt. It's almost certainly a parallel belt to the one that Bear Trap's on, and we've worked extensively with the USGS to define that. But I think the sort of picture in Idaho is much less clear on these trends than it is in Nevada, but it's been emerging. So what do we have? We've got the largest undeveloped gold reserve that's not owned by Newmont or Barrick in the lower 48 of the US. 4.6 million ounces of gold. We've got a total 6.6 million ounces of resource, which that's part of. This will become a 340 to 380,000 ounce a year producer, which will make it the largest mine in the lower 48, not owned by Newmont or Barrick, of any project that's in the current pipeline. We do have antimony as a byproduct, and this is on the critical and strategic mineral list put out by the USGS. There is no domestic production in the United States. They're essentially dependent on Chinese production and Chinese processing capacity over there to make the products that are essential for defense, energy, etc. And so we're not just a gold project, and it essentially leads to a lot of political interest in the project because of the potential to address critical mineral supply. It's also one of the it is the highest grade undeveloped open pit deposit in the lower 48. With a sort of 1.7 gram life of mine reserve over that entire life of the 12 to 15 years. But it's over 2 grams in the early years. So, very significant grade. And what does that give you? Gives you very low costs. We're in the $616 an ounce all-in sustaining cost range, but in the $500 an ounce range in the early years. There's what's happening? There's significant leverage to higher gold prices because of the substantial production profile, the substantial reserve, the substantial resource, but a lot of exploration potential. Because one of the challenges of US permitting is you don't want to change your project footprint during the permitting process. So we froze exploration back in 2014, but we've worked up a lot of the targets and we're ready to go with drilling as soon as possible. So there's a lot of potential to add to the resource and reserve going forward. And we're, as Keith mentioned, I agree, the sort of value part of the curve, I think the best value part of the cycle is in the development scenario just as you're sort of coming out of the permitting cycle, because you've already got a proven project, it's economic, you're almost permitted, you're ready to turn it into something significant, but you've been neglected and typically significantly undervalued in the in the market. And we're just coming out of that process. So, we just published our draft EIS on August 14th. There's a major milestone. We anticipate about 12 months to complete the permitting process out of, 5+ year process. And of course, the key to this site, which makes it very different from a permitting regulatory perspective, is we're cleaning up all the historic impacts on this site, which I say are significant. Now we go to the next slide. So just sort of emphasizing where we are on the, the cycle. There we go. So we submitted our permit application back in September 2016. Essentially for the last 3 years, we've been buried in, the project evaluation, the back and forth with the agencies, the request for additional information, doing the feasibility work to make sure the feasibility, aligns with what we're permitting, and vice versa, that we're permitting what's in the feasibility study. And the culmination of all that work added up to 27,000 pages of information we submitted to the agencies, over that 3-year period. The draft EIS, which got published in August, is 5,000 plus pages long. These processes are hugely complicated and burdensome. But a significant part of that was of our effort has been laying the groundwork for the public comment period, which we're now in. It's a 60-day period that's commenced. And we did 841 community meetings leading up to the draft EIS with all kinds of groups. So we've been massively engaged in, a huge variety of community forums, across the local area, across Idaho, and, broadening out into other areas at appropriate events. And so, the culmination of that is, there will always be people opposing the mine and or any mine anywhere, and they'll be putting their comments in, but we've built a substantial support base which will put in positive comments as we go forward. The next big milestone coming up after the comment period ends is the feasibility study be out. It's essentially largely complete, but what we're looking to do is ensure that what comes out in the feasibility aligns with the draft EIS, which we just got, but also any feedback from the public comment period. So we'll sort of finalize that in Q4 this year, and then we'll have a feasibility study out, during Q4. And then the final milestone on the permitting is to get to a recorded decision, which the current schedule shows as being September 21. So, just about a year away. So those are the key highlights in, major project, large scale, long life, 12 to 15 years, 380,000 ounces a year, $600 costs, very attractive long life project and lots of exploration potential to go.
Okay. Thank you very much for that. Question from Joe Yakuza. Stephen, what would be the cost to address the legacy environmental issues?
Yeah, I mean, it's something that we're definitely going to address in the feasibility study. In the PFS, we treated all of those costs as part of the development costs. So we didn't strip them out and separately identify them. So, we're picking up 30 million tons of waste rock that's been put in the wrong place, like in the river, and we're moving it and relocating it to, suitable waste storage facilities. But that's all just treated as our pre-strip. So, it's hard to sort of break it out. We did a back of the envelope at the time of the PFS, afterwards when people started asking the question, we came up with $100 million pretty quickly. And it's not hard that hard to do when you've got, 30 million tons of rock to move, and other things like that. And interestingly, there was a tour not long after that, which the EPA led, as part of the, sort of looking at it and the cleanup afterwards. And, they commented that, Midas has sort of put out this number, indicative $100 million. And their sort of comment was, hey, if this was a government cleanup project, it would be 2 to 3 times that amount. And so, yeah, and, we would agree because there's a massive synergy to, the cleanup work we got people, we got equipment, we're using 200-ton trucks, not 30-ton trucks to move that tonnage. We've got the equipment to construct the proper facilities. And one of the wins is there's 3 million tons of tailings grade 1.2 grams a ton gold. We get about 75% recovery on that. Round numbers, there's $100 million of payable gold in that tailings, which, in the similar to we use the cost of moving the material as a cost, we use that as revenue. So it's just part of our production profile, but it, substantially offsets, the net cost of that, cleanup work.
Okay. Quite a few questions coming in about gold and antimony. How do you propose to separate the gold and antimony? Usually would the concentrate be shipped to China? Have you a process for your project metallurgy? What is the estimated cost of rehab? I appreciate that's about 4 questions in one,
Sure.
but if you could try to answer them, that would be great.
Sure, I'll hit on the metallurgy first. Usually, and this is where we started on this project, antimony is a big problem in gold operations, particularly when they're refractory, single refractory like ours, because the gold is tied up in the antimony. Antimony interferes with gold recovery and pressure oxidation circuits, and it's a bane of operators in Nevada and things like that. They have to manage to keep that level down. However, in our situation, the antimony is a late stage cross-cutting mineral event, and it has no gold in the stibnite mineral that contains the antimony. And so we can do physical, flotation work and get ideal, near perfect separation. Our antimony concentrate ends up with less than 1% of the gold in flotation. And you could push it further, but we did a trade-off analysis, because that gold you're losing is free gold and gold in pyrite. It's not tied up in the antimony at all, or in the stibnite at all. So we can physically separate it in flotation. So we have a flotation plant which has an antimony pre-float circuit. However, the point to keep in mind is that only 14% of the ore has antimony in that justifies running that pre-float circuit. So in mining, we separate out the high antimony ore. That gets processed separately. A couple of months a year, we'll be processing that material. The rest of the time, there is essentially no antimony to speak of in the mineralization, so you don't even run the antimony flotation circuit. So you can physically separate the gold out, or the antimony out from the gold, and what goes into the autoclave is way below what they run in Nevada levels of antimony. So you're nowhere near the problematic level.
Okay. Keith, do you have a question for Stephen?
Yeah, I actually have a couple of questions. I know there are going to be other questions, Andrew, but I think Stephen is going to be quick on these questions. The first one, what kind of capex are you looking at, Stephen?
Yeah, in the PFS, it's about $970 million in initial capital, virtually very little sustaining capital, because the only thing we end up doing is replacing the truck fleet halfway through the mine life. That's of any significance. The rest of it's pretty minor sustaining capital. So yeah, it's a big project, big capital, but big production, long life.
Yeah, that's good. And the antimony, what sort of percentage of the revenues you see, assuming the same prices right now, or maybe your PFS prices, that antimony will be? Maybe 10%, 20%?
No, it's only about 4% of the cash flow. I mean, this is this is a gold mine with antimony as a byproduct, and the way we run our economics is we assume the antimony is worth 0. So every ton is carried on gold only. And then we decide, okay, if that ton is going into the mill, can it then carry the incremental costs to recover the antimony? And so it is a true byproduct. If antimony was worth 0, every single ton in the mine plan would still go through the mill.
Okay, the main reason why I ask you that is because it's a critical mineral, and what Trump is very favorably disposed. In fact, the US and Canada and now Australia all looking at critical minerals in the context of China. And if you could...
No, that's why I said it's getting all the political attention, because we would be the only domestic supply. in the US. There's essentially no North American production. The dominant, like 90% of the world's production comes from China, Russia, and Tajikistan, none of which are particularly friendly to the United States. And so, having a potential domestic supply definitely opens a lot of doors that would not be opened for a straight gold project.
Yes, and one of the things I was kind of hinting at is when you look to fund your CapEx development, you might be able to get some of the government agencies to support you because of the strategic nature of the antimony.
Yeah, or it just opens other doors and different approaches. But it's definitely very much on the radar screen politically, bipartisan, not just Trump. Obama started the critical minerals group back in 2009, I think it was, somewhere in there, and developed the strategy initially, and then Trump continued on with that, or the administrations continued on with that. But it was really started getting pushed back under the Obama administration.
Again, just turn to Justin. I don't know whether you've got a question for Stephen.
Yeah, I just had a question. In what state does the antimony come out of the project? Is further downstream refining required? And if so, does that capability exist today in the US, or will you have to send that offtake abroad?
So the feasibility, we make a stibnite concentrate, the mineral stibnite. It's a really high quality stibnite, one of the best in the world, according to the off-takers. It's about 60 to 65% contained antimony and has 0 penalty level metals in it, which is really good. So it's a premium product that can go to a wide variety of opportunities. And the big win is because there's no gold in it, you've got that flexibility. There is only one antimony gold smelter in the world, in China. And so if you have a mixed gold antimony con, your terms are pretty awful, pretty challenging, and your negotiating capacity is really limited. So having a pure stibnite con opens it up, because it's not just antimony smelters, there are also lead smelters and copper smelters that deal with lead and antimony, deal with antimony and lead concentrates, or antimony and copper concentrates, and they have the facilities to process it and recover it. And so it broadens out that audience to potential, selling it. I mean, the challenge is a lot of those facilities are in China, but there is a new facility in the United Arab Emirates, which is going through startup. It's in financial challenged, but it's backed by the UAE government. So, undoubtedly it'll get reorganized and continue to operate. And so it'll just be whoever ends up owning it at the end of the day. That one is out there. The one that intrigues me the most, and is an ongoing point of discussion, is the old Sunshine Silver Mine in northern Idaho has an antimony plant for sulfides that used to run for many, many years. It's currently owned by the Kaplan Group, and they are moving from their project in Mexico, which they just put it back into production. This is kind of next on the radar for net redevelopment, and of course, silver price has gone way up. They produce a tetrahedrite ore, which is an antimony mineral as well, but they have a facility there to convert it into antimony oxide. And then right across the border in Montana is a plant that takes antimony oxide and makes antimony trioxide, which is the flame retardant, which is the biggest use, and antimony metal. And so this used to be part of the integrated circuit that Bradley Mining, which was operating our site, used to ship its material to, and the old antimony plant in Montana, or the antimony plant in Montana, was the old Bradley Mining facility that, so the pieces of the puzzle are all there. So, again, back to the comment that Keith made on that, the US government really wants to see that supply chain security. And so, maybe it's not money to us because we can just produce the concentrate, but maybe it helps Sunshine get its plant up and running, and it helps US Antimony get their plant, fully up to speed, and, sort of integrating that supply chain to make, the entire chain inside the United States.
Right. Okay. And then I just had one other question. Obviously you mentioned kind of a large capex, a big nut to crack, just under $1 billion. My sense is just given what a great project you have, you probably won't get to this point, but because you'll likely get taken out by one of the big gold producers. But at what point will you initiate your project financing activities?
No, we were just waiting for Denham to show up with a $700-800 million check or whatever. And
We'll talk after this, Stephen.
But seriously, the key milestone for us is get the feasibility study out, because then we've got our pre-feasibility study is obviously getting out of date now, but get the feasibility study out. That provides the platform. We've been working with Endeavor Financial for the last couple of years to kind of get them up to speed to sort of go into the project financing discussions. We've engaged with a variety of royalty, streaming, banks, strategic investors type. We have Paulson on our register in a big way. They obviously put up a substantial amount of capital to deter. There's a whole variety of options out there, but we can't really crystallize that until we get the feasibility study out and everybody can look at the latest and greatest numbers.
Just a quick question. Are you thinking about a sort of 60-40 split, or you think you can do it at a 37 in terms of project finance? 37.
Yeah, I mean, the preliminary indications is, because of the margin on the project, I mean, $600 all-in sustaining costs, and anything like the current gold price environment, you got a massive margin that, you could probably get the 60s kind of number. And then, then it's how do you build up the rest? And, if you go on a standalone basis, but, we'll also look at, the joint venture type approach. The project's big enough, do you go down the Gold Road Goldfields kind of deal where you don't do any equity? Yes, you dilute your ownership in the project, but you substantially reduce your, capital requirements, so there's that aspect of it. And then somebody was asking earlier, Peter, about infrastructure synergies. I mean, one of the possibilities out there is why did Barrick put in $38 million US into Midas and buy 19% of the company? Was their interest is in taking our concentrate to Nevada and using it as an energy source. And they wanted to have the optionality. And fortunately, the Nevada joint venture hadn't been formed yet. So we were sort of working with Newmont and Barrick in parallel to try and get the best deal. And Barrick, signed up in the end, and that's who we did the deal with. But, essentially we would make a higher grade concentrate on site and then truck it to Nevada, and it would become a fuel source to the refractory facilities in Nevada. And they really need that material. I mean, people may not be aware, but they just announced in Q1 that they're going to refloat the tailings from Golden Sunlight to mine in Montana and truck the pyrite from there down to Nevada to provide that energy source. And the key is the energy is it has to be sulfide sulfur. It's not just sulfur. It has to be sulfide sulfur to create the heat and the acid. And so they're going to be doing that for the next 5 years, which lo and behold, give our permitting time frame, construction time frame pretty much aligns with where, we would start to produce concentrates. So, that's an opportunity. It obviously whack out a whole bunch of capital for us because you wouldn't need, the downstream parts of the circuit. But, to be clear, that is not the base case. It's not what we're permitting. We're permitting, the whole meal deal to go to Gold Doré. We're assuming that's what's going to happen. And anything Barrick or the joint venture want to do has to be competitive with that standalone scenario.
I think we're nearly out of time, so we've just got time to bring up our last polling question, which, Brooke, can you bring it up, bearing in mind that 2 of our mining guests are projects in the US? So we bring up our last polling question. And it was also a few people putting comments in the chat box. Who would be the next US president? So I know there's really only 2 main candidates, but I've given you 5. Joe Biden, Donald Trump, Kanye West. Donald Trump would declare the result illegal due to postal fraud or other. So I have no idea really what other could possibly be. Seems to be a bit of a close run thing between Joe Biden and Donald Trump. Just whilst you're voting very briefly, Peter, Stephen and Peter, I'll go to Peter first. You both have US projects. how would a Joe Biden administration be different to a Donald Trump administration with regards to mining? Peter?
I suppose just to be brief, the concern, I suppose, of any mining company is that the constraints on us become greater. But I think we live in a world where you need mining. What's the old saying, that if you can't grow it, you've got to mine it. And so, I think a balanced approach. We operate in Ontario. It's not necessarily easy in Ontario due to all kinds of restrictions there, from a community point of view and from a permitting point of view. So, obviously concerned about it becoming more restrictive, but I think we'll be able to adapt.
And Stephen?
Yeah, I mean, step back, from that last slide, is we actually filed our permit application in September 2016, which was under the Obama administration. And at that time, everybody was anticipating, a Democratic win, and, not say you politicize your project, but, that was the environment we were anticipating when we went into the permitting process. And we haven't changed our approach to the project through the whole current administration. So if there were an administration change, we believe that the combination of, economic development, substantial jobs in a rural part of Idaho, and critical minerals coming out, combined with this, the site restoration, we're going to clean up what, is $100 million plus problem at no cost to taxpayers. And so we think that, appeals to a broad spectrum of interests. And then you toss in on top of that, the current COVID impacts on the economy. We'll have 500-ish direct jobs, 1,000, 1,500 when you include indirect jobs, substantial tax base, $1 billion capital investment project. That's a big economic win, no matter what administration is there.
Stephen, just on that brownfield, was that ever a Superfund site?
No, it's not a Superfund site. It's not on the national priority list. It's been considered twice, but it's kind of that not too hot, not too cold. And so there's lots of issues on site that everybody wants cleaned up, but not bad enough to trigger, the Superfund intervention.
Mm-hmm. And just bringing in Kevin from Anaconda, obviously your sort of projects are obviously in Canada. Is sort of like political risk and changes of administration, is that sort of like a key consideration for you, or do you overall you find Canada a pretty mining friendly jurisdiction? It doesn't really matter as to who's in power.
Well, it's really at our size, it's at the provincial level. So it's different in every province. There are some provinces I would not work in. It seems like the eastern provinces are quite good. Newfoundland has been very, very good for us, very mine friendly. Nova Scotia is mine friendly, but it's a little slower, the path that you have to take with permitting. I've got to hand it to Stephen for spending 4 years and getting to where you're at, Stephen. And I wish you all success in the next year. We have another year of permitting in Nova Scotia as well. So, permitting is something that's forefront. People have to understand and be realistic with their timelines. Otherwise, you're just going to shoot yourself in the foot. Don't cut corners, because you're going to have to go back and make them again. So, we've been able to permit several mines in Newfoundland, and we will permit the mine in Nova Scotia. And it doesn't really matter who's in charge to a point, because we always act in the best interest of the environment, health, and safety. So that doesn't change with whoever is in power. And if whoever is in power doesn't understand that we're working to help as much as we can with the environment and job creation, there's nothing we can do about that. We do what we believe is right, and we let the technicals of the project drive it.
Okay. Well, I think with that, we can just kind of close the poll. I think that Joe Biden won our virtual poll with 42%, Trump 32%. Not too sure about the 3% that voted for Kanye West, but they've probably been drinking the Shiraz red that I've been drinking. So without further ado, many thanks to our guests, our sponsors, Anaconda Mining, Premier Gold, and Midas Gold, as well as the Resource Group Network, and also to you, the audience. Our next episodes will be taking place at our upcoming Minds and Money Online Global event, running next week, 31st of August to 3rd of September. Over 110 mining corporates have signed up, cracking keynotes from the likes of Mark Bristow, Tom Palmer, Laura Thomas, Andy Smallridge, Sean Rooson, and Peter Marone. The event is free of charge to attend. I hope to all see you there. Until then, stay safe. Goodbye.
Thank you, Andrew.
Yeah.
Bye.
Thank you.
Thanks a lot, Andrew.